Hello traders, good weekend. Vladimir here, and this is the weekly forecast review for the week of 11th of December 2016. This is actually our last weekly forecast for this wonderful year 2016, and with its all wonderful trading it provided to us. So how all the summary of 2016 we will have later, closer to the end, but this is the last official trading week for this year, simply because the next week a lot of traders start to leave trading and go to vacations, which will drop the volatility, of course, and which means simply we just better stay safer. Later on we have Christmas and the New Year and the great environment of end of the year is coming, and trading will wait for the beginning of January. So basically what I would recommend, starting from let's say 19, 20, 21st, everyone who has his own preferences, to stop trading and wait for let's say 5th, 6th of January until traders come back to the market and come back to trade right after that. That would be a great time to everyone to go over the materials and over the trading results and summarize the year. How did you perform? How did you do? How did you progress? Where did you improve? What still could be improved? And actually go over your progress and process and your studying and your trading to make all the um, conclusions to make 2017 better. So, what we will be trading on this week? This week might be one of the most or the most important fundamental weeks during this year, and that might be the most important fundamental week to bring 2017, and maybe it will even be one of the most important there as well. I am talking, of course, well, we have a warming up all the way until Wednesday, and then we have the real deal, and I'm talking about the federal funds rate to be published according to the expectations and the forecast we have from the analysts. The Federal Reserve is expected to increase its rate. Will it? We will see that on Wednesday. Only a few days to wait, so we definitely have the patience for that, right? After that, of course, well, we have other important things like the labor rate in Swiss, we have the job market in Australia, we have the rates in Britain, and the monetary policy to be published there, but nothing can really compare and beat the importance of Wednesday's event. Now, what could actually go well or wrong with the publishing of the cash rate? The Fed could actually go and increase the rates. The market is ready for that. The dollar gained strength recently, basically everywhere, especially versus the yen, the euro, Swiss, also versus the pound, New Zealand, Australia, everywhere. Right? May just accept the Canadian. If the Fed really increases the rate, then the market will be not just reacting to this move, but also to the words what the future will look like. Because if the Fed will say something like we increase it now, but from now on we will be very, 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 very careful, then the market might do exactly the opposite reaction and say, ah, really? So you just make one time increase and that's all, game over? And that's what could push the anti dollar moves, and that's why we really have to be careful here. If the Fed disappoints and not increase the rate, that of course could make it even worse to the anti-dollar moves, right? If the Fed does not raise but say, okay, but next month for sure we will, then again that could bring some mixture into the movement of the market and cause zigzags. So that's basically what we have to understand, that if even if the Fed increases the rate, which is the expectations among the traders and the investors, it does not necessarily guarantee that that would be it. Yes, the dollar is expected still to gain some strength, maybe on the short term, but we have to be very, very careful here, because if the Fed says that's now and that's all, after the power it might gain on the short term, it might change. Okay, so that's why we need to prepare the scenarios and get ready to trade them. So let's start with the euro dollar, which recently dropped, you see, all the way for over than 300 pips from its top after Draghi expanded the quantitative easings. The biggest question remains now, what's coming next? Watching on a weekly cycle, we have this window for the trades. Okay, we have the 161 on the bottom, and if we take that as a triangle, right, this movement, we have it right here, slightly below than a parity. Okay, now if we measure this move by itself, okay, we also take us to the same place, anywhere in between, let's say 0.92, towards the parity or a bit below. This would be the monster zone for the euro dollar to establish its bottom and very likely start the next move back towards 120 or so. So the biggest question would be, will this range that we have on the weekly chart would be broken right now? And even if yes, it does not mean it will be broken big time. It could be broken, as we said, to be a bit below than a parity until it establishes the divergences there and start the move up. So if it does really make the break and holds below and the Federal Reserve does not change nothing, this would be the best setups for us. As again, we first of all need to go below, right? Below that, and this would be the best setups for us. We have this trend line right now. We break below, we go back, and then breakouts of these trend lines to be developed, and we can go for sales. Now I want to see how it looks on the in terms of zones. This is the euro dollar, right? This is its zones. This is the first one, the most important one we have. It's 105. After that, we don't really have any important levels, at least not on the weekly and daily charts. Once we break below, the market will rebuild itself. But basically, the zones are anywhere around the parity, slightly higher, slightly lower. That would be the action zones. So if we do break below, okay, these areas, that's our trend line that we discussed, right? That just discussed. So, and that would be our setup. So we go below here, establish itself below the range on the weekly chart, going back to this area, right? This is our sell action zones. And once we break it, we can go and look for sales. If the Fed really disappoints, and there is a very, very big chance that this range is going to hold, and we are going to see a reversal from here. As we do sit on a very interesting, powerful zone right now, the parity of these two waves, this or this, doesn't matter how you do that, okay? We're actually on the same zone. We're already in an action zone. And if we treat this triangle, and this is the first measurement, this is the 100. And that's why I said we need really to respect the levels and watch for the news, how they really do that. Because if you take a look, there is a potential divergence everywhere, right? Weekly, monthly, daily. But it's not completed. So basically the market, that's how the market is really creating the two scenarios. It could make the last move down to complete the divergence. That would be correct. Or it could make a false break here, retrace, and that will be still complete the divergence with the MACD ticking up. And that's exactly how the market prepares the room for both scenarios. Pound dollar, same story. Technically, it did a very nice triple cycle. We have the divergence. We have all the reasons for the pound dollar to start and move up. Technically, watching on the short term, this movement here also is preparing the ground for buys. So by ideal, we still want to see one more push lower and the pound to establish something like that and to provide us the continuation. All that would lead us to happen if the scenarios from the Federal Reserve happen the way I explained before. Okay, but if the dollar really continues its movement, then the pound dollar, take a look on this move. It might be a bit scary, but we are now on a 61.8. If it does not respect that, theoretically, the pound dollar could still drop down to here. I know it sounds crazy right now, and most likely it will not. But, reality with the Federal Reserve might surprise or disappoint. No one knows, of course. I'm not sure they themselves know yet what they're going to decide. But technically, we have a room. I think we are only after buy. So for me, every drop down is a buy. That's what I'm going to do. And of course, if the Fed really changes these expectations, then we will have to move this expectation from ourselves and let it go down, maybe recreate one more false break here for us with this divergence, and then make the correction. We keep everything open, okay, but with some ideas. As for now, I would make it very, very short. As long as this bottom holds, for me, every drop down is opportunity to look for buy. And I do think we have much more to go. This is the last daily cycle we have. 38.2 of it is around 131, 132 zone. The big triple cycle here, we have the 38.2 around the 139, 140, and the 50 around 145. That's very, very, very doable. And if we take a look on this double cycle, the short one, then we have here, this one, right? Then we have it 38.2 around the 135, 136, which is the gap zone here. So you see how everything comes to the same place. Next one on the list going to be the dollar versus the yen, which moved dramatically. And now the biggest question would be, will this pair be able to make this move to the last stop, or maybe even one more high, to create the 61.8 around the 130, or, and this is the bigger probability from my point of view, top and make one more low to here. And that's from my point of view what should actually happen. Technically, but I'll be very also careful here, not just jump in, of course. Dollar yen, I was looking for short here, and I still do, but that's the first false break. That could be the second. That's why it's very, very important to repeat, because I got so many questions recently. Vlad, what's going with dollar yen? Vlad, what's going with dollar yen? You say down, you say down. Yes, that's true. I did say down, and I still expect it down. But we don't attack blindly. We are waiting for the confirmation. And the confirmation is for two false breaks. Why two? Because we are against the weekly chart and the monthly chart. Looking for this convergence idea to happen. Pull it back. And while the top will hold, look to sell the breakout of the trendline to be developed. That would be the setup we would want to trade. And as long as it didn't happen, every time you try, you might fail. And guess what? The move could start to happen exactly in the moment you will give up. And that's what brings me back to the same words I said a lot during 2016. Don't try to be a hero. Don't try to make hero calls. No one cares about heroes in the Forex market. No one. No one cares how many times you predict well. No one. Traders' job is to make money. And you make money when you wait for the right time and the right opportunity. Even if it means sit on the fence for 1 or 2 weeks. Remember that no one cares of heroes in this market. Traders are measured by the money they do, not by how many times they had successful calls. No one cares if you would make 1 or 2 profitable trades only out of 10, as long as you will make more money. Remember that. That's where so many new traders fail psychologically. They have the feeling that they have to make money always, all the time. No, that's not true. So that's in terms of the dollar yen, which brings me to the other yen pairs, and on the majority, New Zealand versus the yen, which really sitting on a great level. But yet we are against the weekly, so we are now watching for the false breaks to start. We did have one false break right here on the top, so I'm looking for one more false break to happen, which could lead to this move, then retrace, and we're looking for the sells. Or another scenario is to make it this way: a false break here, lower lows, retrace into break of the trend line, and sells. In terms of dates, let's take a look on the dates and let's see where we have our possible days. First of all, let's start with day 11, which is today, and it begins the importance of this area. We have 11, 12, 13, 15. All the beginning of this week is very important and possible for top. It does not mean we sell. It means we are looking for these sells. I myself would prefer it happens around 83 or slightly higher, and I'll explain in a second why. If it does not successfully hold these first days of the week, we go for 17s, 19s, and end of the month after that. So what could happen here is exactly as suggested. 2 scenarios. 1, we go below this low, retrace up and selling. 2 is we are going for a false break here, lower lows. First important thing is for the false break, of course, always, right? Retrace into breakout and sell. So why I say that I prefer around 83, because according to the weekly chart, we have one false break here, we have one false break here, we might have one false break here. That's what I would like to see. False break here, and then you can really build up good sell opportunities to the downside. So keep that in mind and watch that to happen. Euro yen was the only one provided 2 false breaks in a row. Here was one, here was the second, and actually it also had the third. Now the question is, will this lower lows would be enough? I would be careful here, very careful here, because it could easily follow the other yen pairs, make this kind of move, and then lower lows, 2 ups and sells. But since this scenario already happened and last 2 highs kind of made a breakout here, this correction could be considered. The way I would prefer to work here would be to find a false break here, and then lower lows, retrace up and sell, or rallying a bit further like this and do this same scenario after that on this place. False break, lower lows, pull back and sell. So that's the levels. Now in terms of days we are good. Now let's take a look on the important zones we could go for attack. This is the first one around 122. 122.60 would be the next one. Very important zones to pay attention to. If we break above, by the way, then our next levels would be here, and that could be again 123.50 and 124.50. Keep an eye, very nice opportunities which we have to respect and pay attention to. Now I could keep going and going. All of them would be the same with the ideas of the yens, Swiss yen also looking for the second false break to complete itself. By ideal, it would break above this top, and then we are looking for this lower low. So false break, lower lows, retrace, and sells. That would be a really good opportunity. Let's see if it could happen. So that's about the yen period. Now let's talk about the other opportunities, and we have plenty of them. Euro pound, with all its amazing move, I still would, by ideal of course, prefer to see this happening, making us reach the 0.82 down to 0.80 zone, back to trend line with this divergence to complete and the rally. So on the short term, I would prefer to get the second wave and look for that sell opportunities. Next one on the list is going to be the Aussie versus the Kiwi, which is still only after buys for me. Now, the Aussie Kiwi, according to the way it moves by its cycles, could still try to go lower towards 103, towards 102, maybe even for a new low. But with this cycle token, we are only after buys, and every low we got created, we are going to look for buys. For those of you who are good with investments, this is an amazing place to start the journey. For those of you who don't, look for the same scenario I love to talk about. False breaks, higher highs in that case because we're looking to buy, two waves down, and with the breakout, go for buy. Okay, so this is the way to trade the Aussie Kiwi, and that brings me to the Euro Kiwi, which is also on an amazing cycle. One false break on the bottom, one false break on the top, and we are in a range. And now it is making the triple cycle down to the range. 1, 2, 3. We have the divergence and it's forming itself. So anywhere on this place, we expect this to happen. It will take some time as it's long-term cycles, but we should be looking for the buys already. We need two false breaks. We did have them, actually. We have 1, 2. Now we need higher highs, and that we still did not have on a daily chart. So by ideal, we go to it like this. Higher highs, retrace, and a fly. And could that happen lower? Yes, it could. And that's again the difference between the investments, just sit and wait, or hold for the right opportunity. And you decide on which part you prefer to be. Cat Frank doing exactly what we wanted to see several weeks ago or a few months ago. Broke, and we expect a correction and a continuation, of course. Watching on the short term, we got triple cycle here, definitely not the most sexy one, but still correct. We do have its divergence building itself up on daily. We do have band to band with halfway more. We have this high being broken, which could lead for a false break. By ideal, again, we are looking for false break. So that would be an amazing setup, lower lows and sells. That's what we will be looking to trade. New Zealand and dollar, amazing one again, did the rally we wanted, looking like starting the sales. By ideal setup here, a false break with lower lows to be created, so we're looking for something like that. Break below the trend line, break below here, and two rallies up and sell. Now, we could say that the false break already completed here with two waves and a false break, which is correct, of course. And the thing is here that we got now two waves up. So what could happen is we are going to get 2 or 3 ups here for the correction, and then with the breakout we will be trying to sell. That's in case we don't have new high to be created. Okay, so keep an eye on this one, really nice opportunity as well. Aussie dollar, with its rangy movement it has, I would still of course prefer to get one more push lower and to look to deal with the buys, basically, nothing else. And again, pay attention. All I'm saying here is rely on the fact that the Fed will be able to disappoint this or other way around. If the Fed does not disappoint, the dollar going to be uh, very strong. It could change the things a bit, of course. Okay. So for the Aussie dollar, for example, if the Fed really does not do does not bring anything good, the Aussie dollar could make the second leg down towards 0.71 or so, and that's a very valuable scenario, a very possible scenario. And for that to happen, we would need to see basically the break of this low, retrace, and sell. All right, and that's all. Or of course we can go a bit more aggressive on the only on the last rally view, breaking below this low, retrace, and sell. At the end of the day, it's all about the risk reward here. As long as your risk reward is good, you can try 1, 2, 3 times, fail, and still make profits on the move when it happens. Remember that. This is game of risk rewards. Gold and silver. Gold by ideal should, well, doesn't should, but I expect it to complete this kind of move. There was the 161.8, that's 11.30, 11.20. That is where I want to look to buy. On the 4-hour chart, we got this triple, we got the range, so one more push lower would be just ideal. But we have to remember, we already with a bullish hidden divergence on the weekly, we already with a bullish continued divergence forming on a daily. So once and if we get two false breaks we already have two false breaks, but we didn't have higher highs. So we need a higher highs, retrace, and then with the breakouts, we are going to deal with the buys. That in turn, that if the 11.30, 11.20 is not reached. Silver did a triple rally up, should stop around 1670, 1660 approximately, and recreate this buy opportunity. We have this trend line, which should hold. If it does, we do the same like with the gold. If it does not, we are going for one more final low, which should be below this bottom, and would probably be approximately around 1580, maybe lower to 1530. From here, I expect a fly. In terms of indices, I was looking to deal with the possible short-term sales, but here, once again, the importance of false breaks, convergence, and retraces. We were looking for a false break to happen on this place and create lower lows for us, which didn't. Okay, and this is why it moved and we let it go. Most likely, it has the room towards 2300, 2400 to complete this cycle as it's creating itself, and the current weekly triple cycle movement. That's like this: 1, 2, 3, and complete this cycle expansion. We have duplication around 2300, and we have the 2400 plus. We have 161.8. Once we are there, boy, oh boy, something crazy is going to happen. What, when, why, no one knows, and I'm not even going to try to predict because it's just a gamble. But the thing is that once it happens, there would be some crazy things. Why, when, no one knows. But for sure, there are currently no buyers, and when the price is moving out of the buyers, that's normally a sign that something crazy is going to happen. Again, as I said, when, what, how, no one knows, including myself. Oil, I am only after buys. I did the first scenario as wanted to see. I still would prefer to get something like that, of course, and then the fly to the upside. So if I will summarize it simple, even without trying to give you some specific levels or anything. Every 2 waves down or 3 waves down, followed by bullish divergence, look for buys. Bottom line, technically, we should get it going towards 60 or 60 plus. Every 2 waves down is opportunity to go for buys. And that's how the dollar CAD also I expect it to move. It looks like the bearish call started for big time for this pair, but on the short view, I believe we would be dealing with, we had one false break and almost second, which didn't. I believe we will, and then we'll be looking for pullbacks and retrace, which after, I believe, is going to lead us for a very, very, very big move down. All that is relevant as long as the last high holds and as long as the Federal Reserve did not affect the market the other way than we are looking and dealing with. That would be all for this week, friends. And that would be all for 2016. Thank you very much for your time watching this video. Thank you very much for watching all the videos during this year. I hope I was useful for you and you benefit from my videos. I'm going to be here for 2017, of course, for you, with more amazing surprises and things to happen for the next year. So once again, thank you for the time and all the time you gave me during the trading year. I wish you best and happiest holidays. If you like the video, please uh, click the like button and leave your feedback, and feel free to share with anyone who you believe can have any benefit by watching this video. Thank you for your time. Yours, Vladimir Ribakov.